Hi, everyone. Welcome to the Beresford Booth weekly webinar. My name is Sherry Bosse Lueders. I practice in the areas of estate planning and probate with our firm's estate planning and probate group. And today I'll be talking about Washington estate tax planning basics. And I'm going to start doing that by actually talking about federal estate tax because Washington estate tax and federal estate tax are different. Federal estate tax applies to the value in an estate when someone dies above an exclusion amount that is $13.99 million for 2025. Lifetime taxable gifts, so any annual gifts that are made to an individual above whatever the annual exclusion amount for federal gifts happens to be, have to be reported with a gift tax return. Those lifetime gifts are then added to the total value of your estate when you die. And if it's over $13.99 million, there's likely going to be federal estate tax filings that need to happen. For married couples, the federal estate tax has this concept called automatic portability. That means when one spouse dies and the surviving spouse inherits everything, there's, first, no federal estate tax return that necessarily needs to be filed when one spouse dies. There may be reasons why a surviving spouse wants to file a return anyway after consulting with a CPA and an estate planning attorney. But if the surviving spouse does nothing, inherits all of their assets, say they've got a couple has 20 million assets total, 10 million of which are the community property of each spouse, surviving spouse then dies with $20 million, their estate gets to automatically use the exclusion amount from the first spouse to die. And with that, their $20 million estate is under the combined $28-ish million that a married couple has as their federal estate tax exclusion. There's a lot more to federal estate tax planning. That's not what I'm talking with you here today. What I'm here to talk about is Washington estate tax. It's helpful to start out by talking about the federal estate tax because Washington estate tax is different and it only applies to people who live in Washington. So there's a lot less information out there about Washington's estate tax. Washington estate tax also applies to the value in an estate above an exclusion amount, but our exclusion amount is a lot lower than the federal estate tax exclusion amount. The current exclusion amount in Washington for estate tax is $2.193 million. That's the amount an individual in Washington can pass on to other individual beneficiaries when they die before there's estate tax. In Washington, lifetime gifts generally are not included in a person's Washington taxable estate. That's different from the federal estate tax where lifetime gifts are added to the top. But Washington doesn't have portability. That concept I was just talking about where when one spouse dies, the surviving spouse's estate automatically gets the combined exclusion amount for both spouses. Washington doesn't do that. It's a use it or lose it exemption amount. What that means for planning purposes is that a lot of married couples in Washington will have a revocable trust or a will that provides for a trust to be funded when one spouse dies that the surviving spouse can fund with the deceased spouse's exclusion amount. I'll talk more about that in a few minutes. Let's talk about planning options to reduce your Washington taxable estate. First option would be lifetime gifts to individuals. Keep in mind, the federal gift tax rules apply. That means that in 2025, the federal gift tax exclusion amount is $19,000 per individual. That's the amount you, as an individual, can give to another person before you would need to file a federal gift tax return. It's not that you can't give someone more than the federal exclusion amount. It's just that you then need to report that gift to the IRS. Washington, as I said, doesn't track gifts, and that's why lifetime giving can be a good option for some families for estate tax planning where they might have a Washington taxable estate but not a federally taxable estate. Another planning option are lifetime gifts to trust. The federal gift tax rules still apply. You'd still need to report to the IRS any annual gift that's greater than the exclusion amount. For a gift to trust to take those assets out of your estate, it would have to be a gift to an irrevocable trust. Why do that? You can transfer assets to a trust now for the future benefit of whoever you want the beneficiaries of that trust to be. There's a lot to trust planning, and we'll save that for another webinar. This is Washington Estate Tax Planning Basics, and my goal for our conversation today here is to talk about very basic concepts related to Washington estate tax planning. It gets very advanced very quickly, and one way it becomes much more advanced is when we start talking about the different types of irrevocable trusts that are available as recipients of gifts. Another planning option would be gifts to charity, either during your lifetime or on death. For a estate tax purpose, we're all allowed unlimited charitable gifts, both in life and on death, in terms of reducing Washington taxable estate. The only caveat is that it must be to a qualified charity, and that's a charity that's been qualified a charitable organization by the IRS. They have a list. One thing to keep in mind is that those charitable gifts can be made as direct gifts to the charities. They can also be gifts to a donor advised fund where you're directing gifts from the fund to a changing list of charities. And it can also be gifts to charitable remainder trusts, which go into that. Trusts start to get really complicated and beyond the basics of this conversation today. So we'll just say that trusts are an option and something to explore in more detail on a later date. Another planning option for married couples is a disclaimer trust. And a disclaimer trust is an optional trust that can be included in a will or in a revocable living trust of a married person. This type of trust provides an option for a surviving spouse to disclaim up to the Washington estate tax exclusion amount, which, as currently $2.193 million to fund this trust. It's an irrevocable trust that's only created if the surviving spouse opts to make the disclaimer. It gets a new tax ID. It's not administered under the Social Security numbers of either spouse. The benefit of a disclaimer trust is that the assets in that trust then are not included in the surviving spouse's estate when the surviving spouse dies. The surviving spouse can still be the beneficiary of the disclaimer trust and can also be the trustee of the disclaimer trust. Got another slide here about disclaimer trust. So typically a disclaimer trust is drafted so that all income is distributed to the surviving spouse for the spouse's lifetime. The surviving spouse can be the trustee or a third party. And the benefit of it is all assets in that disclaimer trust are not in the surviving spouse's estate when they pass away, reducing their Washington taxable estate. Let's talk about a summary here. In brief, during your lifetime, Washington estate tax planning tends to involve gifts to individuals, gifts to charity, and gifts to irrevocable trusts. And there are a lot of different irrevocable trusts. That's beyond the basics. On death, Washington estate tax planning can look like gifts to charities that are made in a will or revocable living trust on death, or a disclaimer trust that allows a surviving spouse to preserve the first spouse to die's exclusion amount by funding this optional trust. There's a lot more to Washington estate tax planning, and I would love to discuss that with you. Here's a slide with my contact information, and thank you for joining me today.